Tech, though, is a very different story. At least two firms downgrading Apple today, while more than 5 cut their price targets after the company beat estimates but did see some weak sales in China, warns of this $900 million impact from tariffs. Here to help us break it all down is Wedbush's Dan Ives. Still has a buy rating, raises his target from 250 to 270. Dan, happy Friday.
Yeah, great to be here.
You. Why do you think the street is negative in spots?
I mean, if someone told you April 2nd that you had that quarter, 900 million, and the India narrative, Hall of Fame performance, in my opinion, from Cook, and it shows they're essentially playing chess. Others are playing checkers in terms of the India piece. This is going to enable them to basically, what I view is from a production perspective, supply chain, iPhone 17 will be on target. And you talk about all that sort of tornado that we're seeing from tariffs in terms of the price increases for iPhones. They're going to be able to navigate that. So in my view, I'm much more bullish today, even, than I was 24 hours ago.
I'm sure you would have liked to have gotten some tariff numbers beyond the coming quarter, yes?
But the fact that they said 900 million, that's
couch money, right?
But it's almost amazing that it's only 900 million. I mean, think about GM, 5 billion, just even given their perspective. It just shows Cook, he's a master when it comes to the supply chain. 10% politician, 90% CEO. So it just shows what Apple's doing here. Look, to lower the price target and be negative here, I don't see it. I'm much more bullish. I get that clients that I'm talking to, the big thing last night and early this morning, why is stock down? I'm just going through in terms of the narrative.
Are you getting pushback from your clients? I mean, that stock is down. I mean, that's a move for Apple, more than 4%.
No doubt. Yeah, pushback, like why be more positive here? What about what happens in September? Can the numbers even be more? My view, Sarah, is like you got to look past next 3 months. You got to understand directionally where they're ultimately taking this. And it looks like India is going to be that life raft in this storm that gets them through. What I viewed is almost just an unbelievable risk if you looked at the last month in terms of tariff and then in the eye of the storm.
What about the fact that there wasn't more clarity on services revenue, the Epic Games suit? Could that be a material risk?
Yeah, my view there, even despite the court ruling, I think that is very minimal in terms of risk to services. I mean, you're trying to find those that actually go outside the App Store to the third party, spend the 3 to 4 steps, and that's going to continue to be pretty small. So I've always viewed this as one where the bigger risk continues to be, whether it's Google or some of the other antitrust, this is something that, to me, it doesn't move the needle when it comes to services. And the services, look, I think that's worth $2 trillion. I mean, look, it is Rock of Gibraltar-like as you're navigating. I think we sit here, you look at big tech earnings this week. If you're a bull, you go into the weekend feeling so much better than you have basically any time in the last, call it 4 or 5 weeks, given the numbers we're seeing. Microsoft, Meta, ad tech, AI revolution, cloud, and now from Cupertino, 900 million? I could tell you worst case was going to be probably over 2 billion.
Can you ladder those names? What, given we've gotten some of those big prints, what's your favorite? Is it Microsoft?
Well, you'd have to say Microsoft, because what they're doing in Redmond basically shows that was one where Azure acceleration. I mean, that was a jaw dropper in terms of that number. If you think about what they're able to do, enterprise, the AI spend, CapEx, and then I think from a number 2, you'd have to clearly look at Alphabet in terms of what we see there relative to what I believe what we're seeing on cloud, digital advertising.
Take a look at that board right there. You see, there's one name that had those misses, and that was Tesla. Today we got April registrations for some European countries. Again, huge declines. But it's not about the car business anymore?
I mean, I've said 90% of the value, as we've talked about on the show, it's autonomous robotics. But that also speaks to, despite, he said, she said, whatever happened with the board, the reality is Musk needed to read the room. He did. It's a conference call that I think changed the narrative, fork in the road moment. He's now focused on Tesla, and I think his days at the White House are done. And that's bullish for Tesla shareholders in terms of the brand damage you need to contain.
Yeah. I mean, that's a year-to-date spread. Down 30 Tesla, Microsoft up 4. That's interesting.
Look, when it comes to the Trump White House and Doge for Musk, it was a dark chapter for Tesla shareholders. And that's why, however it actually ended up in terms of the way that this chapter of that book's written, much better days ahead for Musk and Tesla than the last 3 months, which I continue to view as some dark days.
I'm liking, it's not just the jacket anymore, too. It's the shirt and the pants.
Again, but a month ago, I was wearing black, a little
yes,
negative. I think we're getting a lot more bullish when it comes to tech.
Dan, thanks. Good to see you.